Good evening to one and all present here and welcome to today's event. With the global economic uncertainty, most of us are concerned about investments and where the market would be heading going forward. To provide you a clear vision going ahead, we have with us our CIO, Mr. Sunil Damania, live in today's event. Feel free to drop in any queries you have in the Q&A box available just below the video. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very warm welcome all of you. There is a huge debate going on, and if you happen to be listening to some of the experts around the world, and including in India, there are point of view that if the world economy is going to slow down, India being a part of the global economy, the impact has to be there. There is another school of thought which says that India is going to charter its own growth strategy amid the global uncertainty. So, while we're discussing with our complete webinar team, we were discussing what should be the topic that we should select. And we thought, let's do a topic on global economy. Why we did that? Because I'm getting more and more concerns when I was going through some of your the chat that you people put, I get a sense of some amount of uneasiness you people are having with what's happening in the global economy. And rightly so. There is nothing wrong, in fact. And we thought, let's do this webinar. What I'm going to try to do is that the world economy, the global economy has many factors, which is pull and push factor. I don't want to give you and bombard it with you so much data that you people get confused with this. So I'm going to make keep my presentation very short, sweet, but at the same time very pointed towards the issue that is impacting the global economy. And if that is so, what could be the outcome of that? Very simple. I'm not going to bombard with this number and that deficit and other deficit and what's happening, because this presentation is not for the institutional investors. This presentation is for the retail investors. I want to make it as simple as possible so that everyone understand and feel karne ka kya uska. That also I'll come to that. So I will make it very, very simple and this one. But before I begin my webinar, just a small disclaimer that I would like to say that this webinar is only for an education purpose. Okay. Equity market by nature is volatile, and past returns should not be construed as an indicator for the future returns. With this, let me wish everyone a happy Onam. Is my slide visible? Happy Onam. Jason? I think I'm facing some technical issue. I'm not able to, so while my slide is changing, I think you are not able to see. Can we have a couple of, in the meantime, maybe, the person can fix it. So, just can you come and fix this, please? Yeah. Do that. So what I'll do, I'll just start with my comments. The breaking news is that ECB has hike 75 bips rate hike. Okay. And this has come as a big surprise. As I speak to you, the US market is in problem. The Europe market is down, and I think that's going to create a lot of this one. So I was talking about the happy Onam. I wish everyone happy Onam. There are many people who are from this festival is basically celebrated only in one part of the country, that is Kerala. One state celebrate this, but we also had a very good celebration today, and here is the picture of that, where the complete team of MarketsMojo celebrated this. If you can make it full screen, this okay, and if you can see Joyson there in the center of this one. Next to it's Ansa, our leadership team. You can see Ragis next to her. And then we have Joby, who has joined new. He's a chief operating officer and head of compliance. Then you can see Karan, our chief product officer, besides me. And then so the complete team is there, and we had a very good celebration. This is the first time in our office we had food on the banana leaf. So it's a typical way we celebrated the Onam. So my wishes to everyone, happy Onam. Now I was talking about this breaking news. ECB hiked interest rate by 75 bips. And I must tell you, this is not the last rate hike has been done by. So when I make this presentation, this data was not there. But before I came for this, my analyst informed me that ECB has hiked this one, and that's a breaking. Now the global market. So unfortunately, global economy is passing through one problem after another problem. Challenge इसका कोई बोलता ना कोई अंत ही नहीं बोलता तो चलेगा. In March 2020, we faced COVID. और जब कोविड से बाहर आके कोशिश कर रहे थे, we had because there was supply side issue and what not, then chip shortage happened, and suddenly we had Russia and Ukraine war. That's created a huge disruption. And what has happened yesterday? Russia is again threatened. If Europe is going to act smart, I'm going to basically stop exporting. I will not allow Ukraine to export the grain. That is one part of the problem. The second part of the problem is that whatever the natural gas that they are going to have, they're going to ration that. And that's going to create further problem for a country like Europe, which is heavily dependent on natural gas from Russia. Over and above that, what is the state saying? We'll cut off oil and the refined products, also oil refined products, cutting off the supply of that. Now, it's every day it's a news story, something or other is happening. It's completely rattling the world market. I must tell you, it's rattling the world market. And there are debates happening on soft landing, hard landing, and whatnot. Soft landing is that the economy, it's very simple. When you fly and then the flight takes and start landing, if it is soft landing, you don't feel the jerk. If it is a hard landing, then you feel the jerk, am I right? When it hits the tarmac. So that's what the difference, the same corollary you can use for the economy. And again, the house is divided whether it's a soft or the hard landing. But every day, it's a new challenge. On the top of it, one is Russia. The world debt has gone up significantly. The stimulus that has been announced by especially the developed economy, and this is the first time the public debt has increased at the faster pace as compared to the private debt. And that's a reason for some amount of concerns that everyone has been talking about. The balance sheet size have increased very significantly. Now, when the rate of interest were low, it was all fine. But when the rate of interest start increasing, then you need to serve that debt also, am I right? And that creates a more problem for the world economy. I must tell you, no one has a very big clarity about what way the things are going to happen. I'll give you a classical example of that in August 2020, 2 years back. You know what Fed Chairman Powell said? Inflation is not a concern at all. It's going to be transitory. They took it so lightly, and then today, the last month in the Jackson Hole meeting, what did he say? He really created a panic situation. He said it's a non-negotiable. We must bring down inflation to 2%. And it's going to cause pain to the consumers and the economy. And this is how, so a person who has best of the best analysis, best of the best data, is not able to fathom what's going to happen. And I think that's the big challenge that we are all going into. The challenges are multiple. Today, whatever I could elaborate, whatever I'm going to put it down, tomorrow there could be new challenge that comes in because the things are evolving so fast and no one has an idea about it. On the top of it, heat wave is creating a lot of problem. And that heat wave problem is not only particular to the one part of the world, whether it's China on the East Coast, whether it's Germany, whether it's a US. I think the heat wave is creating a lot of problem. Why it's a problem? Number one, the agri output is going to get impacted. There are no doubt about it. And world will have to really struggle in terms of, in fact, India, if you remember, this Rabi crop, that wheat Rabi crop, is going to be little less because of heat. The yield got impacted, and that's really impacting. And due to that, Government of India also had to force to ban wheat flour and so on and so forth. So lower agri output is one. But another problem is happening is the hydropower, and especially some of the developed economy where hydropower plays a very significant role, and that's a one step that they took to move away from the thermal power to the hydropower. And when there is less rain, less water, your capacity to generate hydropower gets impacted, and that's increasing the power cost. In fact, power cost has increased so much, and I don't know how many people are from Europe and the US. And US also, there are different kind of scenario. You'll be surprised to know that in US, certain portion of the part of the certain what we call province, the producer is paying to consume the power because they have excess capacity because of solar and this one. And other places, the power cost has gone up significantly. Why? Because there is no proper grid is available. So if someone is from US and if they can concur what I'm saying, I'll be happy to know that. So power cost is going up. Why? Because hydropower has come down. Why? Because of the heat wave. Now, country like Germany, where they use Rhine River to move the goods and services, they are not able to move. Why? Because the water level has come down so low that your vessels cannot basically pass on because it doesn't have that enough water to move this, and that's impacting. And last but not the least, some of the nuclear power reactors, they need water to cool. Am I right? And the water is not available, and that further increases the pressure on the power cost. On the top of it, the each and every country to tame inflation has been hiking rate of interest. कोई choice नहीं है, कोई चारा नहीं उनके पास. And in fact, the some of the best world experts or the central bankers made us believe that inflation is going to be transitory. It turned out to be persistent. Of course, we have been saying that for very, very long time, that inflation is going to be more persistent than the transitory. And we have proved right. But on the top of it, well, ये तो सब हो गया, लेकिन और problem कहाँ पे? China. And even as on today, as I speak to you, there are many provinces or many cities in China are one way or another way under lockdown because of that zero COVID policy. At the same time, this real estate is dragging the Chinese economy. And when I come to my prediction of the Chinese economy, I'll come to that how even optimistic even the IMF as we speak. So, and China has been the growth engine, whether we liked it or not. That was the growth engine for the world. Why it was the growth engine? Because China used to consume almost 72% of the iron ore production. Okay, it used to get 55% of the refined copper in the world, and oil near about 15%. So, one can understand the kind of significance China had in the world economy to do that. And if that slows down, it creates a problem for the lot of other economies in the world. And with the currency depreciating of many countries, it further adds to your import bills. Am I right? Because you need to import the same product, you need to spend more of that local currency to do that. And these are the multiple challenges that the world economy is going through. And that's the reason people are asking, are we collapsing? Is the world economy collapsing? And if that is so, मेरे पैसे का क्या होगा? मैंने जो investment किया equity में, उसका क्या होगा? And I think that's a fair question to ask it. Now I'll give you some critical data points on the economy front, just to help you understand. So I'm not going to bombard you with so much data and confuse you. Okay, my job is to simplify the the problem, and then how do we see the solution to that? So let's start with the PMI. There are two kinds of PMI. That is Purchaser Manager Index. It shows, so anything above 50 is an expansion in the economy. Anything less than 50 is a contraction in the economy. So the 50 is a line which decides whether there is a activity in the economy is increasing or decreasing. Very simple. 50 is a threshold. Uske upar economy is growing, uske niche economy is contracting, because that gives an idea how good the sentiment is. Now, if you look at this, can we make this? Yeah. So, if you look at it, the dark blue line that you see is of India, 58.2. Am I right? And if you look at this graph, India, then this is composite. What is composite means? There are two kinds of PMI, manufacturing and the service. And when you combine both, it gives you an idea of a composite PMI. Okay. Now that is above 50 for India. That's increasing. But if you look at it, you look at this one. The US is 44.6. Is it a happy situation? The answer is no. Is it? Can you see 44.6? That is for the US. UK has come down less than 50, and I do believe UK will face more problems, and the new Prime Minister coming in will not have an easy task on their hand. Japan 49.4, and China is at 51.7, but it's declining. And the way things are happening, there is a high probability that even China's composite PMI can go below 50. So that's another. The only silver lining is India, 58.2, and it's increasing. So while other countries, you look at it, it's going down. Am I right? वो line नीचे है. India का line ऊपर है. It's moving up. And I think that's the good thing. When the global outlook continues to remain challenging. And this is the growth, GDP growth that we can see. And we have divided into US, UK, Euro, because UK is not a part of Euro now. Anyway, it was never basically. And Japan. And we look at India, I think India is in a much better position. But this portion, I think, continues to remain a challenge for the world economy. So that brings to the another question, that inflation ka kya ho raha? Because I think everyone is talking about inflation. And the reason why ECB hiked the rate of interest by 75 bips because of inflation continues to remain extremely high. Fortunately, India is the only country among large economies where the inflation is constantly declining. Next week again, India's inflation will come. Of course, next week even US inflation will come. So while US inflation came down from the previous month, but it's 1 month. While India, we have been consistently declining. 3 months in a row, we have seen decline in the inflation. India's GDP is growing, and the inflation is coming down. While for the world, it's exactly happening opposite. And I must tell you that one more thing, the RBI is going to hike the rate of interest when they're going to present their monetary policy this month. And this could be the last rate hike. While in the world economy, we should continuously expect a rate hike coming from the various central banks. Now, before RBI is going to come out with the rate hike, the Fed is going to do the rate hike. 20-21 September hai. Now, there is a 75% probability that there will be another 75 bps rate hike from the US, which could be another problem for the world economy. Okay, it would create more pressure for the emerging market currencies also. So, Fed has anyway did 75 bps rate hike twice. They've already increased 150 bps rate hike in that sense in 2 tranches. And over and above that, another 75 bps rate hike. So that's a challenge. And there are experts who believe that there could be 150 bps rate hike. The next 3 monetary Fed policy that's going to happen, 150 bps rate hike. to the in the US, and that's, I think, going to create more pressures on the emerging market currencies. And if that happens, that further increases pressure and make the economy more fragile. We have also seen some of our neighboring countries passing through a very tough time, whether it's a Bangladesh, whether it's a Pakistan, whether it's a Sri Lanka. I think situation is going to remain more and more fragile. So then the question comes, kya karne ka kya? Is this the, should we get out of the market? Should we do that? That's where the situation is. And I must tell you that even IMF has gone in the predictions haywire. What IMF has said, let me put it this, they believe that India's GDP will grow at 6.1%, which is one highest growth in the world, and among the largest economy. And they believe that 4.6% in China. I don't believe that. If you remember, when in January 2022, when IMF came out with a prediction that China will grow at 4.8% for 2022, I had gone on the record saying that China will grow less than 4%. In July 2022, IMF says that China will grow only at 3.3% and 4.6% in 2023. I again believe this number is highly optimistic. In fact, I do believe that this number that we are looking at 2020, 2022, many countries, they are highly optimistic. The situation since July has further worsened. I think the crisis in terms of heat wave crisis is because of the drought-like situation, the supply side constraints, I think continues to remain. In fact, I forgot to put that picture. So in US, there are, they said from 1st August 2022, our store will remain closed on Monday and Tuesday because we are not able to get the employee. Now that's the kind of situation we are looking at it, okay? The price hike is there, salary hike is there, not enough people are available, people purchasing power is going to meet only the fuel cost and other things, and that's creating a lot of problem. Demand slowdown is definitely there, and I think it's a problem. So karne ka kya? What is that? What should be this? So let me come to the conclusion part. What should you be little concerned, and I'll spend more time on this because that's what the gist of this webinar is. We don't believe and we don't predict gloom and doom scenario for the world economy. I again repeat, while some people are predicting gloom and doom scenario for the world economy, I don't believe so. But having said that, I do expect pain will be there. And for some countries, this pain would be so prolonged that if they don't take a right corrective actions, I think they are going to face a lot of hardship in terms of reviving. Keep this slide little prominent so that, this one. And that's where I think the policy decision from the central bank of that respective countries, number one, and number two, how government basically reacts to that is very, very critical. The way UK Prime Minister made a statement, the new, makes me a little worried, to be very frank with you. There are many countries in the Europe has given one or another kind of a subsidy to reduce the burden of higher fuel cost or the power cost, one or another way. And that's going to add to their deficit. They need to somewhere get that revenue. How do they get that revenue? On one hand, they need to also ensure that they can't afford to increase the taxes to bridge that deficit. So I think it's going to be a little challenging for the world economy to face this problem. It's not going to go away, but it's not a gloom and doom scenario. It's not like a panic, a kind of a scenario that we need to be believed. But remember, pain is going to be there, whether we like it or not like it. But will that pain be there for the India? The answer is no. I again repeat, India will not be having point. And it's not me who is saying. Of course, I've been saying for quite some time. But even yesterday, Moody concurred what I have been saying. What did he say yesterday? Moody came out with a report in India. He said, India recovery is not going to get derailed because of Russia or Ukraine military conflict, higher inflation, or even the policy tightening from the countries such as US. India is the only country, or among the few countries in the world, which would see higher or decent GDP growth rate, lower inflation, and I think that's going to make India a shining star. And it's a very rare combination. Normally you see in the global certain scenario where things. But situations are going to be dynamic. We need to be very, very watchful for the development. We can't be in a situation where we take things for granted, and that also applies to the Indian government and also the RBI. Why? Because things are changing very fast. If US has to keep hiking a lot of interest rate, RBI will have no other option but to keep hike rate of interest also. Why? Because to protect, otherwise there'll be a run on the rupee. Why? Because people would prefer to basically go and invest in US market because it's giving you higher yield. Am I right? So RBI and the government of India, it's a very dynamic situation that we are all. And fortunately this time government has been very, very proactive. Whether it was wheat, whether it was steel, whether it was sugar, I think government has acted very, very swiftly to ensure that the domestic consumption story or domestic consumer don't face the brunt of it. That's one of the reasons we see a constant decline in last 3 months in the inflation trajectory. There is also possibility, the way war has started, there could also be possibility that war can end, okay? Or there could be a truce between the Russia and Ukraine and say, okay, enough is enough, and let's call a peace. And if that happens, I think the world economy can significantly improve. Because today, one factor that is causing a lot of problem, especially for the Europe and for the US, is the Russia and Ukraine, because it's completely disrupting the supply chain issue and restricting a lot of movement of goods and services. So that's a very developing story. No one has a clue. It can happen tomorrow. It can happen after 1 month. It may not happen also. We don't know. And it's very difficult to read the mind of Putin, what he will do. In fact, yesterday he almost threatened, Russia threatened that they will stop supplying and everything. Am I right? And hence, and even if you remember, if you must have read, even Turkey president made a statement that we can't take Russia lightly, whatever the threat they are giving. So it's a very developing story, that developing things are happening, and we need to be very, very watchful. But again, I said, it's not a gloom and doom scenario. I again repeat, there is not a gloom and doom scenario. The one positive thing which I see as some ray of hope, and where the inflation seems to be more concerns by other people, I do feel that inflation can come down if the China and US is going to face slowdown, which they are. I don't believe that China will grow what IMF is predicting. In fact, I'll be surprised and pleasantly surprised even if it grows at 3%. I don't believe China will grow at 3% in 2022. Why? Because of a real estate crisis and other things, and they are also giving stimulus and other things. In fact, China's central bank is the only central bank who has reduced the rate of interest than hiking it. Okay. The JP Morgan very recently came out with a very interesting report, and it said that that global inflation has come down for the month of July to 0.3% from an average of 0.7% in the first half. JP Morgan is more optimistic and says that the global inflation will come down to cool off to about 5% in the second half as compared to 9.7% in the first half. So that's one ray of hope. And if you remember, somewhere in, was it in August or was it in July, Jason, I predicted about crude oil?
July.
July, okay. So, if you remember, and Jason, just keep that clip ready so that we can play for the benefit of this one, where I suggested that, crude oil price will come down to $80 to $85 by barrel by October 2022, if you remember that. And when we closed the call on Oil India, which was stock of the month, if you happen to read that note, which you must have received if you are a paid member, where I mentioned very clearly that crude can go down to $80 to $85 per barrel. And one of the reasons I was saying at that point of time is that my basic assumption was that US and China is going to slow down. And that's what exactly is happening. And if China slows down further because of its COVID-related thing, real estate is in a doldrum and is facing a lot of problems, I think it's going to impact very, very badly. And in fact, China continues to have a zero COVID policy. So can you quickly run that slide, if you don't mind, that video?
Yeah. This is rewind to the old prediction.
Yeah. I do believe that crude price will come down to $80-85 per barrel by October 2022. And that should really help Maruti to do well.
Yeah.
So, Indian market, now the point is we are all investors. Mota karne ka kya? Equity mein, am I right? So we have been saying from January 2022 that Indian equity market would be an outlier. The first half would be challenging. Second half, the market would give it returns, and that's what is happening. So if you look at it, while the Dow, Nasdaq and S&P 500 are down in double digit as of yesterday, today I've been informed that Dow is down by 200% or so, 200 points or so. So that's not included. Indian market is in green, whether it's a Sensex or Nifty, both are in green. And even if you convert this into a dollar terms, Indian equity market has outperformed. Why? Because Indian rupee is depreciated by 7% or so. Okay, versus Dow is down by 13%, Nasdaq 25%, and S&P. And we continue to believe that while the world economy will impact, I'm not saying no, the India's growth story, but impact would be very limited. And hence, I do believe that India would continue to be an outlier in terms of stock market performance. In fact, yesterday or a few days back, I was listening to one expert. He was saying that in March, before COVID hit, the Hong Kong, which is a very leading indices in the world, Hang Seng, is still lower than the pre-COVID level. And India has significantly moved up in the same time. And that's the kind of outlier I'm talking about that's going to happen. China will face problem and they will continue to face problem. It will not be easy for US, UK and the Eurozone to come out of the problem. It's not a gloom and doom, but they need to go through that pain period. But on the other hand, while the other world will have a pain, India would see a gain. And that's one of the reasons why FI have come back very strongly in the month of August. They understand अगर उनको अल्फा जनरेट करना है उनके पोर्टफोलियो पे, they can't afford to miss India. And yesterday statement coming from Moody is a classical reaffirmation of our thought process that India is going to be the signing star. And in fact, if you remember, Mohit was saying other day, the shift is going to happen from the west to the east. And that's where India is going to be the player. And I must congratulate Indian government. I must congratulate RBI, the kind of work they have done. And in fact, government doesn't seem to have done with the reforms. Why? Because now government is also talking about more PLI, production linked incentive scheme, to ensure that Atmanirbhar Bharat, Make in India and China Plus One policy. And they are going to be a game changer for the Indian economy. The GST collection is a classical example of that. Indian equity market very close to 60,000, am I right? And that's again it shows. And remember, market is always a leading indicator. It's not a lag indicator, it's a leading indicator, which clearly shows that India is going to do well. So while the world will face, India will be the outliers. And if you really wish to participate in that growth story, come to MarketsMojo. We have a very good package of 19,999 for 2 years, which works out to near about 10,000 rupees per annum, near about 800 rupees per month, less than 30 rupees per day. And if you really want to enjoy the upside of the Indian equity market, see, remember, in the month of June, we have predicted कि मंदी खत्म हो गई है. The risk-reward ratio has gone in the favor of reward, and that's exactly what has happened. We had also stated that FI will come back very strongly, and it has come back. And I can't recollect, but Jason, if you can recollect, who's predicted $350 per barrel kind of a, sorry? Oh yeah, okay, JP Morgan. They suggested that crude can touch to $350 kind of a this one. And at that time, someone had asked me, and I said, I don't see that's going to happen, $350 per barrel. So I think that's why we set it $80 to $85 per barrel kind of a crude that's going to happen. So my point is, again, I'm saying time and again that don't bet against India. World में problem रहेगा, and that's a part and parcel of the world. But Indian economy is going to do extremely well. So my suggestion to all of you, remain invested. Global worry will make market little volatile, but eventually Indian economy will do extremely well. With this, I would open the floor. I would request Jason to please open the floor for question answer.
Okay, I'll pick this first question by Mr. Rajiv. Hello Sunil, Indian market has gone up in a very short time. Do you see a short-term correction coming? If so, by what percentage?
Sir, so I'm not an expert in short-term, to be very frank with you. Okay, I look at the macros, and then based on macros, I try to, Rajiv, understand where are we heading towards. There could be, in fact, if you happen to attend my webinar on 1st September, I did mention that kind of gain that we saw in the month of July and August may not get repeated. But I did mention that by October 2000, that is next month, the sentiment would be extremely jubilant. Okay, so I do believe, and Rajiv, you should never ever try to have a view on the market for the short term, because ultimately you are not coming here for 1 month, 2 months, or 3 months. Am I right? You are coming for the longer term, and if that's the time horizon, then how does it matter short term volatility? So I again repeat for the benefit of everyone, by April 2027, I strongly believe that Sensex could be at 1.25 lakhs. I strongly believe Nifty could be somewhere closer to 37,000. And this prediction I have been making for some time, and I continue to believe that's going to happen. And if that's going to happen, Rajiv, how does it matter what happens in a very short time? Uske kya farak padega? You don't try to time the market, am I right?
Okay, we've got this question by a couple of investors. This one by Mr. Shyam Sundar. In a worst case scenario of Indian economy also underperforming, will there be any sectors which are likely to grow, or will it be the case of different levels of underperformance for all sectors?
It will be different level. Definitely it will be different level for the all sectors. Because kya hoga? See, the first thing we are making an assumption. We are making Shyam Sundar ji is a statement that India, worst case scenario, Indian economy is also underperforming. And that's a hypothetical question. I don't see that happening. But whether underperformance, no underperformance, I must tell you there will be a divergent in the performance. When I made a presentation, and unfortunately, but maybe Jason just remember this presentation, we can retrieve that clip. So when I made an equity outlook 2022, I had said very loud and clear, in 2021, each and every sector have participated. I don't expect that to happen in 2022. And that's exactly what is happening, am I right? IT has not performed, pharma has not performed, and so on and so forth. So while I do believe market will do well in the second half of 2022, but we will see a huge divergence that's happening. There are 3 sectors I have stated in last Diwali, Murat Bhai, that sector is likely to do well. One was auto ancillary, and capital goods. And I continue to believe these 3 sectors will continue to outperform even going forward.
Okay, this next question by Mr. Frank. China's superfast train corruption scandal has come in light after Evergrande real estate scandal. What is your opinion? Will that affect markets?
See, I don't know which scandal is that for super fast train ka, Frank, to be very frank with you, so I'm not updated as far as this is concerned. Evergrande was not a scandal, I believe. It was this one. But will it that affect the market? For the Chinese market, yes. Not for the Indian market. I don't think so. See, China has to have a lot of problem. Why? Because I think the policy actions are little haywire. In the sense, zero COVID policy, I don't know what is China wish to achieve by doing that. I think the real estate seems to be a much bigger problem than what you and me would like to believe, because I believe it's going to create a lot of problem for the Chinese economy, for the Chinese people, and it could also create some kind of a social unrest for the economy. So I don't know what this super fast train corruption problem is, but Frank, I do believe China will have a. That's one of the reasons I was saying I don't agree with IMF prediction of growing more than 3%. In fact, I did not agree with the Jan prediction. And at that time also, if you remember, Frank, I did mention that China cannot grow at this rate. And I don't believe the July prediction also. They will see a lot of slowdown in the GDP growth. So yes, this will definitely impact China. But will it impact India? Sir, the answer is no.
Okay, I think a lot of questions coming on oil and its future. Bhargavi asked this question. What's the future of oil as OPEC is cutting oil production? Is it beneficial or negative here?
See, it's a negative, sir. Na? If someone basically cut the production, it is logically a negative, isn't it? It goes without saying. But at the same time, demand is collapsing, sir. And that's one of the reasons the crude prices have started coming down. And that's one reason I believe, and that's one of the reasons we stated in July also, that crude can touch to $80 to $85 per barrel. So it is negative, Bhargavi, but for the oil price to go up, but I think the demand is also contracting at a significant pace, and I think that's due to that. I believe the crude will remain a little low, and we also need to see what China does it, because Russia does it, because Russia is a big joker in the pack in that sense.
Okay, this question by Mr. Abu Bakr. In case a recession starts in US on next year, can you predict about how long the recession will last?
So I'm of the opinion that the recession is already there in the US. It's only thing it's not been officially announced by the economist, which they're supposed to announce. So it's already there, sir. Now your question is that how long the recession will last? Very difficult to say, sir. See, there are many moving parts in the US, and what kind of policy action Jerome Powell does and what needs to be done, we need to wait and watch. And unfortunately, Jerome Powell has been found little inconsistent in his own statement. If you happen to listen to him, forget about 2020, 2021, even in 2022, if you happen to listen to him, and if you can make a note of that, you will realize that he has been little inconsistent in his thought process. And if that is so, I think it's going to create some amount of this one. So my sense is that US is already in the recession. It's not officially been announced. That's what my sense is. How long the recession will last, we need to wait and watch. But this time I do believe there could be more pain for the US consumer and for the industry. So the recession may last longer than the previous recession that we have seen. It's not going to bounce back in 2 quarters or 3 quarters. That's what my sense is. And I must tell you, sir, I'm not a student of economics. So please take my comments with the pinch of salt. Neither I can understand the world economy so well. But whatever I'm saying is my personal opinion, not MarketsMojo opinion. So you should take it with the pinch of salt. Yeah.
Okay, this next question by Mr. Lakmi. Hi Sunil, I was reading an article where says FIs are done with their buying. Does it mean now profit booking will start? Should retail investor also start profit booking for stocks which are at 52 weeks high?
Sir, ये कहाँ पे पढ़े आपने? I don't see that happening, to be very frank with you. I maintain, again, I repeat, and see, this is all I've stated in my blogs also. And I continue to believe that FII will invest more than what they've sold in first half of 2022. In other words, in 2022, there will be a net buyers of the Indian equity. That's what my sense is. So I don't subscribe to that view, sir, that they have done with it. But I don't know, and who made this prediction? In 80, you are saying you read it. Sir, I have not come across, unless it has been mentioned today, because normally I read newspaper in the night, 11 or 12. That's why basically that's when I get a time to read newspaper. But otherwise, I don't believe that FIs are done with the inflation. On the contrary, as I was saying, India would be the only shining star, and hence they are going to pump in more money to create an alpha on the, because they are fund manager. They need to create an alpha. So I don't see any reason why they will not do that. But I don't know. I have not read the article, so I will not be able to comment on that article that you are referring to.
Okay, this next question by Mr. Rahul Kumar. There is another PMS house which was bullish on cement stocks for quite long, and Shree Cements was his top pick, which has now moved substantially by 15%. Why MarketsMojo IP did not recognize this opportunity?
Rahulji, I must tell you one thing, and I must admit very candidly that we don't say that we'll be able to identify each and every stock in the which is going to do well. What we look at also is that we all come to conclusion on few days price movement and believe that this company is going to do very well and so on and so forth. But few days does not define anything, am I right? The same company, Shree Cement, if you look at it in YTD, is still down by, despite so-called rally, is down by 10%. And we are not here to play momentum and so on and so forth. Even if you look at last 1 year, Shree Cement has down by 20% or so. The margins are coming under pressure and so on and so forth. And the competition is increasing. So whatever the gain that you are talking about, 15%, will it get sustained, not sustained? I think it's too early to call it as a victory, sir. We are playing a 5-day match. And if that's so, should we come to the conclusion on first over and saying that this match has been won or match has been lost? I think it's a little too harsh on that front. So good luck to the PMS house, which has suggested that it will do well. We do believe that to see why the cement prices, cement companies started doing well, was a report that the cement producers have increased the prices significantly to offset the cost. We need to wait and watch. And I think the September data that will come out, I think we'll get some more sense of that. I would be surprised, and Jason just put this as this one, because when the numbers come, maybe we can basically say what we predicted for the September numbers of cement companies. I do believe that numbers that will come out from cement companies are not going to be so great for the quarter date September. Why? Because the input cost would have gone up, the power cost would have gone up, and somehow they are not been, and demand normally remains soft during monsoon, and hence the margin may come under pressure. So I wouldn't be surprised. But good luck to the PMS, sir. And if you think they are doing good job, please continue following them.
Okay, I'll pick this one question by Mr. Shyam Sundar. Apologies that we are not able to pick this question in the past few webinars. He says he would like to know your outlook on the paper and paper products industry, as it's a cyclical one, and he's holding a particular stock like West Coast Paper at a price of 450.
I think Shyam Sundar, if my memory serves me, I did respond to that question in a couple of webinars back, I don't know. But just for the benefit of everyone, again, we continue to believe that paper and paper product companies should do well. If you remember, this we have been saying from not today. From last couple of months we have been saying, and all paper companies have done extremely well. Like someone was saying that why we are not able to identify we've been able to identify the paper stocks, and we do own West Coast Paper in our Mojo Infinity portfolio. So we continue to believe that it should do very well. Yes, you are right, sir. It's a cyclical business, but it's a commodity business, and all commodities are cyclical, whether we like it or not. But we believe that it should do well. One of the reasons are very simple, sir. Why do we believe that the paper should do well? I think the schools have started reopen, and that calls for more paper, whether it's a textbook or the notebook. Number two, offices have reopened. Today I was just wondering, and I was asking our guy who basically takes care of our washroom facility, the amount of roll paper that we consume in toilet and the paper napkin that we use besides wash basin is huge actually. Okay, all these days we are all working from home and the consumption was zero. Now we are working from office and that consumption has gone up. Now what does this mean? People have started traveling. When it should start travel, people do consume paper. So I think the demand for paper is going to remain robust, and we continue to believe that paper companies should do well because that will translate into profitability. So we do that. Yeah, that we believe that. Is there another question there?
Yeah, he's also asked about a particular stock he's holding, a company, Anthony Waste Handling, and which is a municipal solid waste management company, where his average price is 280 and it's in his personal portfolio.
So we also believe that Anthony West should do well. It's a buy in our system. It's not a Mojo stock, but it's a buy in our system. We believe that it should do well.
Okay. Moving on to this question by one of the investors. Sir, should banks give me good profit? Should I increase my position in them? Banks like Karur Vysya, BOB and IndusInd Bank. Also, EID has not given significant returns. Should I continue to hold it?
So let me first go to the EID because that surprises me, sir. When you say the EID pair has not given significant return. Jason, can you just show my screen, please?
It's currently not visible.
Visible?
No, it's not visible.
No, I have actually done it actually. Oh, I don't know why it's not visible then. Okay. So EID pair, sir, just for your information, because I'm not able to share my screen, there is some technical issue, is up by 25% in 2022 versus benchmark, which is just up by 2.46%. In last 6 months, it's up by 38% as compared to Nifty 50, which has gone up by 12%. 2x outperformance. In last 1 year, EID pair is up by 39% versus Sensex is up by 3%. So, sir, I don't understand well. Of course, are you talking about 1 week? In 1 week, EID pair is up by 4.69% versus the Nifty 50 up by 1.57. Again, 3x. So, sir, I don't know why you are getting this data from. Well, it has not done well. In fact, it has been our stock of the month, EID pair, that we recommended almost. Jason, when we did recommend stock of the month, maybe last November or so, if my memory serves me right, and it's done extremely well, EID Perry. I'll tell you when did we did that. Unfortunately, I'm not able to share my screen. So we recommended in December 2020, and it's up by almost 72%. During the same period, the benchmark is negative. So it has done extremely well, sir, AID. So I beg to differ with you. 1 week, 6 months, YTD, 1 year, and since December 2020. It has done fantastically well. To which period you are referring to? Well, of course, if you are taking 1 day, then I will not be able to comment on that. As far as the banks are concerned, sir, I personally believe that I did one webinar and I said that banks could face a lot of headwinds going forward because of NP increasing, credit deposit ratio continues to move up. That will going to create some amount of pressure on them, banks, and the loan growth book could be a little challenge for them. So my sense is that they will. It makes a lot of sense to lock in some of the profits in the banks that you mentioned about.
Okay, there's this concern by Mr. DP Mohanty. He says, unfortunately, one of the Infinity Soul portfolio is giving around consistently minus 16 to minus 17% return for the last 2 months. In this loss booking call has not been given and zero profit booking calls. We should identify such Infinity and take corrective actions.
I agree with you, sir, Mohanty, sir. And I must tell you, not only to you, sir, but everyone, our investment committee on a daily basis. I again harp on the word daily basis. We look at each and every stock that we are holding in the portfolio across all the Infinity portfolio, and we see what needs to be done in case if we have to get out of those companies. Number one. Number two, we also look at each and every portfolio of Mojo Infinity and see who is performing, who is not performing. Do we need to do any corrective actions? And sir, you can take it from me. We are taking all the corrective actions. If your portfolio is down by 16 to 70% consistent last 2 months, I must make a prediction here again. You will make a statement, sir, in the month of December that my portfolio is in positive. And I can tell you with confidence. I must also announce for the benefit of everyone that a lot of you people had a problem that your July 2021 portfolio was down, am I right? Was negative. And I had promised Mohit also that in October 2022, your portfolio will be in green. And many of you have confirmed to us that portfolio have turned positive. So Mohanty sir, आपका भी portfolio by December 2022 would be in positive. That much prediction I can make.
Okay. This question by Mr. Rupesh, and we get this question a lot in Mohit's webinars. He says, What is the ideal percentage of equity allocation after debt fund investment and all calculation of emergency fund requirements?
After debit fund investment, PP fund and all calculation of investment, then the sir, मेरे ख्याल से तो whatever the paisa remaining is there, and if you don't need for next 5 years, please put it in equity. 100% it should be. Mohit may have a different view, so that's a different. I don't know what Mohit normally suggests. Rupesh, but I am the opinion that जो पैसा आपको 5 साल तक नहीं चाहिए, जरूरी नहीं है, that money should go into the 100% because you have taken care of contingency fund, emergency fund. Then it should 100% be in equity. Why should you not? Because if the, and see, remember, equity would be the best performing assets class for the period of 5 years or so. Whether we like it or not, but that's the way it's going to be. You know, when I was suggesting you people that market mein mandi khatam honge in the month of June, not many people believed actually. And today, we are close to 60,000 in terms of Sensex. So that's what happens. Market always surprises you. And market, movement is always sharp. People don't realize that. And many of you had asked, "Are mera 30% portfolio down hai, when it will get convert profit mein aane ke liye it has to go up by 45-50%, and it turn into profit, isn't it?" So my question is that, Sir Rupesh, please go ahead and put 100%. I'm not very sure, but Mohit would have given very similar, close to that numbers only. If you don't need funds for next 5 years and you have taken care of your contingency funds.
Okay, I'll pick this question by Mr. Rajendra. Sir, I would like to know your view on HDFC Ltd. As declared by the management that 25 shares of HDFC will be converted into 42 shares of HDFC Bank. At today's price, we are getting HDFC Bank at 3% lesser rate. Is it not wise to buy HDFC Ltd if you want to buy HDFC Bank?
So that calculation you can do, sir, in terms of arbitrage, and you can decide what you wish to do. I believe that HDFC will underperform. So is the case with HDFC Bank. So from arbitrage point of view, what you are doing is right, but from alpha point of view, I don't think HDFC Bank or HDFC Bank will be able to create alpha. So that's my answer to you, sir.
Okay, I'll pick this one question, Mr. Vardarajan. We discussed in one of the earlier calls for stocks, the previous Mojo score will also be showed. Please tell us when this feature could be available.
I don't think so, sir. We have said anything like that. Previous Mojo score will also be showed. I can't recollect, sir, and I may be sorry, sir, if I'm basically having a poor memory, but I don't think we have basically committed that we are going to show the previous Mojo score to also be shown. I don't think so. We have committed to that.
Okay. Also, in the meantime, in the comments box, I can see a lot of guesses coming in for stock of the month, and also people asking for any particular hints. If you could help them out with that, Mr. Sunil.
Of course, I'll give you a lot of hints, sir. That I'm releasing at 7 p.m. new stock of the month, and that's the hint I can give you now. Company name, I tell you. Do you think if I give some hint, you people are so smart, you will not come and even attend the webinar because तुमको पता चलेगा क्या है वो company. So no hints, sir.
Okay, Mr. Sunil, that's it with the Q&A session for today.
So once again, thanks a lot everyone taking time out. Remember, global economy is going to pass through a lot of doldrums, but it's not a gloom and doom scenario. Don't get panic. Remain calm, compose, remain bullish on Indian economy, and keep putting more money into Indian equity market for a period of 5 years. And I can tell you, in next 5 years, it's a huge wealth opportunity that every one of us would be able to see. And if you want to participate in that huge wealth creation opportunity, MarketsMojo is a very attractive plan at 50%. Remember, this plan is not available on our website. It's only available to our Mojo, those who are attending this webinar. 19,999 for 2 years, which works out to near about 30 rupees per day. Please avail this offer. I'll again request my colleague Jason to please put the link so that you people can avail this offer. With this, thanks a lot everyone. Once again, happy Onam to everyone. See you tomorrow for the stock of the month. Over to you, Jason.
Yeah, thanks a lot, Mr. Sunil, and thanks a lot everyone for attending today's event. We will be shortly sending invites for the same. Looking forward to seeing you all come tomorrow as well. Good evening. Goodbye. Have a great day. Thank you so much.